Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Hi, everyone. This is Yelena Levine from the ISE taking over for Steve Meisinger as your host. Thank you very much for joining us this afternoon. We're very pleased to have with us again Jack Crooks, founder and president of Black Swan Capital, who will be presenting on preparing your portfolio for the worst, diversifying with FX options. With nearly 20 years' experience in the currency, equity, and futures, Jack has held key positions in brokerage, money management, trading, and research. Jack uses both quantitative and qualitative approaches to determine the fundamental driving forces behind the movement of currency, capital, and commodities markets. Jack is also the co-editor of the Black Swan Currency Strategist and Black Swan's free daily e-newsletter, Currency Currents. Jack also founded Ross International Asset Management, a discretionary money management firm specializing in global stocks, bonds, and currency asset management for retail clients. Previously, he was general manager of Plexus Trading, where he specialized in currency futures and commodities trading. He is also chief currency and future strategist at M2 Futures, an investment boutique headquartered in Chicago, as well as vice president of global strategic research for an international investment boutique, where he was responsible for providing daily advice and global strategy analysis. Jack has written extensively on the subject of global currencies and international economics and has been published in Asian Times, Futures Magazine, Barron's, Bloomberg, Dow Jones Newswire, and across many different financial websites. He's also appeared on Bloomberg TV, CNBC, and Fox Business News. I'm going to now turn it over to Jack.
How are you, Lynette? This is Jack. Thank you, everybody. Hopefully you can hear me okay. We'll go ahead and get started and get right into it. What I'm going to cover today, and I don't think a lot of this is going to be a surprise, but I'm going to try and put a little nuance on it as I go through, and also would like you to fire off some questions in here, and I'll get to them when I get through the presentation. Hopefully we'll have plenty of time at the end for questions. Going to cover, I think, the main points, but first I want to show you the setup that we have, or at least what our view is. When I say our view, Black Swan's view on where the dollar is here and where the relative currency valuations are, and then go into the scenarios, which I guess are worst case scenarios. We could play this scenario game all day. There's no doubt. There's a lot of things out there that we never know are going to happen. That's for sure, and we can never forecast these things. But I think the three main scenarios that we lay on the table and the potential currency impact which follow make some sense. I think are in the market. Excuse me, and they have a greater or lesser degree of probability of happening, and I'll try and point to that as we go through. So let me advance our slides here. This is our first disclaimer. That's the Black Swan disclaimer. This is our options disclaimer. Okay. And before I get into the presentation, let's just go in terms of scenarios. I just want to share with you this chart. This chart here shows the various currencies you can see that are offered in FX options formed by ISE. It's a pretty broad list, and they cover, obviously the majors and are getting some semi-emerging market currencies in there. So you can really attack what's going on around the globe in terms of different types of asset classes of movement, i.e. commodities, into the savings currencies, the European currencies, into various blocks. You have the Mexican peso, for example, Brazilian real, currencies that aren't actively traded now by the retail investor, but are getting more and more actively traded as we see the liquidity rise there, and have been traded for a long time on institutional level. These are currencies that are primarily commodity block currencies, so you can pair these with the Australian dollar, Canadian dollar, New Zealand dollar. So in effect, we have 6 commodity block type of currencies there, 6 commodity currencies that make up the commodity block. The the big bulk of that right there you can trade. If you think you're going to get more active movement in a Brazilian real or Mexican peso moving in trend with the other commodity currencies, it may be the way to play it, to take a little more risk and, of course, potential reward out there. Of course, we have all the majors there. The major currencies of the world are considered Australian dollar, British pound, Canadian dollar, euro, Japanese yen, and Swiss franc down here. Those are the six major that make up what's called the six major dollar currency pairs in the world. And they've also added Swedish krona here. Swedish krona is a European currency, moves very much similar to the euro. So it's very much a similar euro bet. But given what's going on in the European Monetary Union, the krona being outside of the monetary union, we may start to see some divergence in this pair. So that sets up just another opportunity. You could play, some type of divergence trades given what's going on. So there's really so many different currencies here that you can really pick and choose a lot of strategies, based on what's here. It's really a nice grouping of currencies to play on the option side of the fence. These currencies are cash settled, meaning at the end of the day, you get U.S. dollar cash for these. They don't expire with the underlying currencies. The beauty really of these from a retail investor standpoint is that you can trade these through your normal brokerage account. Your equity broker can trade these. Any equity broker you have should be able to trade these. They look and they feel just like a stock option. The ISC has done a great job of mirroring what goes on the stock option world, and these currencies look just like it. Same type of premiums, and they carry a certain basket of underlying currencies, have the same type of expiration dates, the same looking type of options table that you would see on the stock options. So if you're familiar with trading stock options, you should be familiar on how to trade the FXE options. The only difference here really in these types of options on the currency side is the underlying. That's it. The underlying being the currencies as opposed to a stock or some type of other indice. That's the only major difference here in this product. So it's a very good product, I think, for the retail investor. We tend to like these better in a longer-term time frame. We don't like to use them as trading vehicles in and out. We think spot, maybe in futures, is better for that if you're doing an in and out type of trade. But if you want to define your risk, buying a put or buying a call, going out 3 to 6 months, even more, you can go out to 10 months on these. We think it's great from that standpoint, and that's how we like to use these types of currencies. Okay.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.